recognize a few familiar faces that we come across in our other aspects of life. Former Governor Evans Kidero, if you can clap for him. And thanks, Evans, you've been very faithful. I think you've attended most of our functions, and for that we are extremely grateful. Let me also recognize Eddie Jeroge. Eddie Jeroge is no stranger, but I'll just mention one of the portfolios he held as former chair of Nairobi Stock Exchange. That's correct, Eddie. And of course, Kengen and many others. I would also like to recognize, very importantly, Chair Emeritus, Wilfred Kiboro. When this gentleman handed over to me, and I keep repeating this, he gave me very, very big shoes to wear. But my feet have grown a little bit. So I'm not as uncomfortable as when we started this journey. The executive committee led by our CEO, Madam Nancy Njau, and Nancy will be introducing the team, including executives of related companies, members of the media, invited guests, ladies and gentlemen. Good morning. Welcome to today's investor briefing. And shortly, it's all about the results. And shortly, our CEO and CFO will take you through the detailed financial performance for the year ended 31st December 2025. But before that, ladies and gentlemen, I wish to set a context of how we got here. 2021, that's 5 years ago, the bank embarked on a pivotal capital raise through a corporate bond. And through that initiative, and I recall, Wilfred, I recall you ringing the bell. I accompanied Wilfred when he rang the bell for that one. And that initiative raised 4.4 billion shillings against a target of 3 billion. That was an outperformance of 47%. This was a defining moment, especially amid the economic strain of the COVID-19 period. It strengthened our capital base, supported lending to MSMEs, that is medium and small businesses, and it enabled us to embark on key technology investment that continue to drive our growth today. With that foundation, we remained focused, and at that time, if you recall, our vision was to get to tier one, to be a tier one bank in Kenya. And that vision has stood the test of time. And to support this vision and to enhance our shareholder value, we initiated another capital raising. In 2023, 3 years ago, shareholders approved a two-tier capital raise program that came in the form of a rights issue, followed shortly by a private placement. While the rights issue raised 252 million shillings under very challenging conditions, the subsequent private placement exceeded expectation, and we raised 8 billion against a target of 6 billion. And that was 31% oversubscription. Now, this strong investor support significantly strengthened our balance sheet, enhanced our agility, and positioned us firmly for our planned listing. I think listing is the big thing now for us. I'm pleased, therefore, to report that we are still on track to list our shares in the Nairobi Securities Exchange before the end of June this year. In the meantime, our shares are doing extremely well in the over the private counter. And if you recall, we did the placement at 14.50 shillings. The shares are now trading at 21 shillings. Perhaps we need an applause for that. Now, turning to our 2025 performance, and I don't want to preempt what the MD and team are going to say. Suffice it to say from the chair that we are extremely pleased that our net profit after tax grew by 55%. Again, another, I think that's cause for applause. And now, soon after the above results were audited, because we wait until we confirm with the external auditors, the board came in to do what the board does best. And ladies and gentlemen, I'm pleased to announce that the board has proposed a dividend of 1 shilling 20 cents per share. Now, before you clap, I think this brings the total dividend that we shall pay to 2.2 billion shillings. That is 100% increase in absolute terms. I think now you can clap. This underscores our commitment in delivering sustainable return to our shareholders. So in closing, on behalf of the board, I would like to thank the shareholders, our customers for their continued trust and confidence. I also extend my appreciation to management and staff for their dedication and disciplined execution. We are equally grateful to our regulators, Central Bank, the CMA, and others for their continued support and confidence that they have shown in Family Bank. We look ahead. As we look ahead, we remain confident that our strategy, I think the MD will talk a little bit about our strategy, our capital strength, our innovation, and our dedication will enable us to deliver long-term value to you, our investors. We also trust, this is very important, we also trust that with God's help, everything is possible. We look forward to your continued support as we take this important next step to list in the Nairobi Stock Exchange. Thank you very much.
Let's give a round of applause to the chairman. Thank you so much, Chairman. Having set context, you'd allow me at this point to invite our CEO and Managing Director, Nancy Njau, to take us through the business overview. Welcome, Nancy.
Our shareholders, investors, esteemed customers present, board of directors led by our chairman, executive committee of the bank. We also have directors and management of related companies. We have financial analysts here in this room, members of the media, invited guests, ladies and gentlemen. Good morning. Good morning once again. Aren't you excited today? Good morning. Just shake the hand of your neighbor and tell them this is the place to be. Yes, we are very excited this morning as we stand here to present the financial performance of Family Bank Group for the year 2025. And before I delve into my presentation, allow me to say that this performance has been enabled by our customers as well as a very dedicated team. And allow me to take this opportunity to introduce the executive committee members whom we ran this bank with, a very able team, a very dedicated team, a very committed team that is behind these numbers. So if you're there, ExCo members, kindly rise up so that I can introduce you. I'll start from this side. And when I mention your name, just wave. That is Phyllis. She's our Chief Retail Banking Officer. Let's appreciate her. Then we have Veronica, who is our Chief Credit Officer. We have John Washuri, our Chief Risk Officer. We have Kalpita Guno. He's our Chief in charge of Special Projects. We have Ezekiel Kimanthi, our Active Chief Information Officer. There is Elijah, our Chief Transformation Officer. John Kinyanjui, our Acting Chief Commercial Officer. We have Eric Muriungi, in charge of our General Manager, in charge of our bank assurance, Family Bank, bank assurance intermediary. We have Jerry Itotia, our acting Chief Human Resources Officer. We have our Pastor of the Day, Bildad Fuaba. He's our Chief Internal Auditor. Paul Garagari, our Chief Finance Officer. Eric Murai, our Chief Legal Officer and Company Secretary. And last but not least, our Programs Director, Belinda Mushigadi Maganga, our Chief Operations Officer. And I know we also have some members of staff in this room feel appreciated for the good work that you have done and to which we are announcing the results today. Allow me to take you briefly regarding Family Bank. And just as a reminder, because I know majority of us who are in this room understand Family Bank, and if you have not, I'll do this for your sake. Family Bank as a group, we have 3 subsidiaries. We have the Family Bank Bank Assurance Intermediary Limited that takes care of our insurance business. We also have our newest kid on the block, that is Pesapap Digital. And Pesapap Digital, we can say that that is our fintech. We utilized that to launch our technology products and took effect last year. However, we are going to be reporting going forward on what we are seeing, but it's a very, very vibrant space. We also have the Family Group Foundation, which is our social investment arm, and we're very proud of what that foundation is doing. In terms of what we have focused to do over time, for the last 41 years, it's always good to know what is our true north. As we do this business, as we run this business, what are we doing? What do we want to achieve? What is our vision? We continue to have this vision of being the financial institution that leads in the positive transformation of people's lives in Africa. And that one is very deliberate because we believe as Family Bank, we have everything and we have solutions for our lovely continent, Africa. So we focus on it, and I'll be sharing with you some of the insights that we're seeing from that. In terms of our mission, we positively transform people's lives by providing quality financial services through innovative, efficient, and reputable practices. That is our mission. So anytime we are having a conversation with our customers, we always make sure that we are doing it in the most innovative way as well as efficient manner. Our purpose, why we exist, is to enable people to create and sustain wealth through access to flexible, affordable financial services. So for us as a bank, we want to enable our people, our customers, our fellow countrymen to create and sustain wealth. So we don't want them to create and then they don't sustain it. We want them to create and sustain wealth. Our values, and these are very core to us, especially as a management and also as the staff of Family Bank. There are these values that really drive us even as we do our business. And key value for us is winning together. We say that we are winning within ourselves, advocating for teamwork. As we do the work that you're doing, I want to attest to all of us this morning that without teamwork, we could not have achieved what we have achieved. And we say we are winning together within ourselves as Family Bank, and also with our customers. We work together and we win together. So any solution that we offer, any conversation that we have with our customers, we want to win together. As we do that, a key value for us is self-belief. We believe in ourselves and also in our customers' ability to change the world or to transform the world. We're in the business of transformation. And everybody seated here has that capacity, that has that ability, and we only need to believe in ourselves. And I want to confirm to you this morning that part of what we are sharing today is courtesy of our self-belief. As we run this business, our programs director said, we're in the business of trust. We want to run it in the most transparent way, because we believe once we run it with transparency, our customers are going to trust us and they're going to reward us for the same. So what you're sharing today is actually a reward of transparency as we conduct our business. Every time we conduct our business as a team, we remember it's not about us. It's about our customers, our shareholders, our investors. It's not about us. And that leads us to run this business in the most humility or humble way. As we do it, we put our customers ahead so that we can be able to meet their needs. Currently, as a bank, we pride ourselves that we are able to solution around 1.3 million customers. And these customers, I can tell you, some of them have multiple accounts or multiple products that they're enjoying from us. 1.3 million customers, we are able to solution them through our network of 96 branches and growing. So currently, we have 96 branches, and we are able to have physical presence within 32 counties. I know it's a conversation that we are having in terms of expanding our county reach, and I'll be sharing with us what we are seeing into 2026 and beyond. So we have 32 counties, but this does not mean that we are not serving the customers who are not within those counties where we have physical presence. We've invested heavily in digital infrastructure, where we are seeing our customers being served across our digital channels. In fact, 92% of all our transactions are happening digitally, which is something to applaud. We are solutioning customers who are even in the diaspora. We have a very vibrant diaspora unit that takes care of all our customers of Kenyans who are living abroad. And we say, live abroad, invest back at home. So we've been able to upgrade or to invest in our digital infrastructure serving our customers. We have support from about 5,000 agents. These are agents that we have recruited to offer the approved financial services, and we have 5,000 of them across the entire country. We've also been able to onboard 103,000 merchants. And all these are meant towards giving our customers access whenever they need to visit a physical device. As I mentioned, we have for the group, we have 1,839 staff, dedicated employees. And when I say that, I mean that, because this team is a team that is committed to making sure that shareholders get value, to make sure that investors get value of their investments. It's a very dedicated staff. Allow me now to just give you some brief highlights of what we experienced in the year 2025 as far as the operating environment is concerned. And some of these things, all of us are aware, we don't operate in isolation. There are some things that may be happening very far from Family Bank, from this country, even from East Africa, and they affect how we run our business. Key to note is looking at the geopolitical tension that has faced the globe for a while now. Of course, we know the issues to do with Russia, Ukraine, looking at what is happening within the Middle East region, all those kind of instabilities. They, in one way or the other, impact how we run our business. Why? Because our customers are spread across. Our customers offer services, they sell their products across all these regions. So anytime there is such kind of political tension, it affects the way our customers do business. It affects than how we do our business. We've seen quite a number of policies within the United States of America that somehow affected our diaspora clients. And at the end of the day, we get the hit as a family bank. Looking at closer home, the East African region, of course, we know some of our East African countries who are going through elections. Whenever we don't have a peaceful election, at the end of the day, it affects how we run our business. Specifically so, for us as Family Bank, is because of our customers. Because as you know, we are not yet into the region, but we are serving our customers who are doing business across the region as well as across the entire globe. Some very positive developments last year. We have seen that the Monetary Policy Committee has progressively reduced the central bank rate from 11.25% at the beginning of the year to closing at 8.75% this year. And this has contributed to a decline in lending rates. As you're all aware, last year, central bank of all banks we changed our risk-based pricing model, where now you're either to adopt the CBR rate or we adopted the CBR rate. So anytime you have a reduction at the central bank rate, then you expect that this benefit is going to be passed over to our customers. And I want to confirm to you this morning that we have done that. We have passed the benefit of the reduction to 8.75%. We have passed that benefit to all our customers. And this is very positive because what it does is that it triggers or it helps in private sector lending. Whenever we have affordable credit, then you'd expect that then our customers are going to access credit and we shall have, the economy is going to grow. In terms of inflation, last year, the inflation remained relatively stable, closing at 4.5%. And this creates a very good enabling environment for businesses, for our customers. Remember, for us, the business that we do, it's all about our customers. So anything that passes benefit to our customers, rest assured, then it benefits us as a bank. In terms of private sector credit demand, we have seen that it's gradually recovering. I think last year, but 2024, we had challenges where it was actually reported that the private sector lending shrunk. But last year, we have seen an improvement. It has recovered, and it's also supported by the declining interest rates and also the improved economic activity. Our currency has been stable in the course of last year. I think against the dollar, it maintained at around 129, 130, which is quite commendable. And this is because of the increased foreign inflows and helped to control the import-driven inflation. It closed at 129. So what happened is that for all our customers who are in importation business, then it worked for them. They are able to predict, they are able to cost or to price their wares, and at the end of the day, we managed to walk the journey with them. Of course, the downside of this, we all know, when banks, in terms of foreign currency gains, they book when there is that volatility, but it is very good for our economy that the currency was stable last year. In terms of the GDP growth, we saw that last year, Kenya's GDP remained growing from 4.7% in 2024 to 4.8% in 2025, and it was driven by agricultural output, growth in services sector, and also increased activity in the construction industry. And allow me to say that as Family Bank, we have flagged ourselves in that. We are doing well within the agricultural space, within the financial services sector or the services sector, and this really has translated into what we are releasing today. Looking at last year, it's quite behind us. And today, this morning, I was speaking to one of us who is here present, and he told me, 2025 is behind us. We want to know what is this, what is ahead. And it's a good thing, and it's a good story. For Family Bank, we were running with a strategic plan from 2020 to 2024. And last year marked the beginning of our new strategic period, which is 2025 to 2029. And we had to take a lot of time to look at ourselves and ask, where do we want to play into 2025 and 2029? And we came up with some key pillars, as you can see from there. One of our core pillars in our 2025-2029 strategy is compelling customer propositions. And what we are looking at is how well do we solution our customers? What do they want? What do they need? We don't want to sit somewhere in a tower, in a corner office somewhere, and then start thinking about products. We want to think solutions. So we've had a very vibrant time where we have unpacked the value propositions or our offering to our customers. We've had various engagement with our customers telling us what we want, what they want, and that is what we are offering. We've continued to segment our business, knowing which segment are we playing in, which sector in that segment are we going to play in. And what we have done is also to make sure that we equip ourselves, we equip our teams so that they can be sector specific and segment specific. And I can attest that 2025, being our first year of the implementation of our strategy, we have seen the fruits, which is in our results. Another core pillar for us is digitization and data utilization. We've done very heavy investments in that so that we can make data-driven decisions. We are into making sure that we invest heavily in digital, in technology, so that our customers are able to serve themselves or to solution themselves efficiently, affordably, at the comfort of wherever they are. A very key pillar for us into 2025, 2029. Productivity and efficiency, this one really focusing on our teams, ourselves, equipping our teams, training, investing in our resources to make sure that we deliver that which we promise our customers. Looking at what is this coverage model that should be handled by one particular staff at one particular period. And that is what we are implementing, looking at our processes, business process reengineering, coming into that matrix so that we can make sure that we streamline our processes so that we can have speed of execution as well as enabling our customers to access services very fast. Enterprise risk management, robust enterprise risk management, very key for us. We understand the kind of business that we run with or the kind of business that we operate. So for us, we are doing it with risk in mind. And we have a very able chief risk officer who puts us to check also in the internal control environment, just making sure that then our risk management is up to the standard. Of course, we are looking at opportunities of expansion, both locally and into the region. And as I said, last year we managed to open one branch, but this year we are focusing into even having more local presence and exploring the region within this strategic period of 2025 to 2029. As I've mentioned last year in terms of optimizing our physical footprint, what we have done into our first pillar, as I mentioned, of compelling value customer propositions, we've received a lot of feedback. And what we've done as a bank is to make sure that we act on that feedback from our customers. And last year, we received feedback regarding some of our branches that when the customers no longer felt were serving them as they ought. So we had to relocate some of our branches, 3 of them last year. And this is really to optimize our footprint. And then we opened one branch that is in Kilifi. And as I've mentioned, this year, we are targeting to expand our market presence to over 100 branches in 2026. So you'll be seeing more of us, and we've already started doing that, looking at our county strategy, getting into some of the counties that we are not. We are in 32, as I said, but we want to make sure that we increase even our county presence. That doesn't mean that we cannot serve our customers digitally, but as we all know, there comes a point where customers want to relate, and there are some of the services that they need to have one-on-one with our team. That is why we are still focused in investing in this country and beyond. Last year, we had a lot of engagements with our customers and as well as strategic partners. And for our customers, as I had mentioned, we held quite a number of forums just to understand their customers, their business, and what is this that they want us to do. We had SME forums last year. We know Family Bank is heavily SME. So we had forums with our customers, just having focus groups, just sitting with them and understanding and appreciating what they are doing and what solutions that we can provide. We also held women empowerment forums. We have a very strong women proposition we call Queen Banking. And we say that we are working with women for life. So last year, we held quite a number of forums empowering our customers, and our women customers. And I can tell you we received accolades for that. We also had agricultural forum. Family Bank, our backbone is agriculture. So we don't want to leave that behind. We had an opportunity to sit with our customers who are farmers, who are in agribusiness, just understanding and appreciating what is this that we need to do. And we had continuous engagements across all business segments with our customers just to appreciate and with the help of some of our partners. Last year also marked a major milestone for us. We received some impact funding from development finance institutions. Key to note, key to mention, we received 50 million euros from European Investment Bank, and also 20 million US dollars from British International Investment, and $10 million from Blue Orchard. And these impact funds are for specific segments. And these are specific segments that as Family Bank, we drive well and we do well. SME segment, agriculture, youth, women, all these funds was going towards that effect, towards that segment. And this is an endorsement. It's such a huge endorsement that we are very clear in terms of our strategy, in terms of where we want to play, in terms of how we want to play. And we really appreciate this kind of partnerships. We also had strategic partnerships within the transport industry, within financial services, where we held forums for our fund managers, forums for attending forums for other services like the circles and microfinances, just looking at opportunities of partnership, because we believe when we work together, we are going to go very far. We are not in competition. We can partner, we can collaborate, and transform the people's lives in this country. We also had a conversation with Kenya Association of Manufacturers just to appreciate what are these needs, what do we need, how do we plug in as Family Bank. And also a very clear key one is our partnership with the National Security Forces, our disciplined forces. We've had conversations with them, Kenya Defense Forces, Administration Police. And allow me to mention that last bank sponsored APS Bomet. I'm looking at all those APS Bomet. Let me see the fans of APS Bomet. Those ones are Family Bank staff. Maybe some of us don't know what is APS Bomet. It's a football club by Administration Police. So I want to make sure, can we move some from Arsenal to APS Bomet? Right? So as Family Bank, we partnered with them because we really want to create impact, giving them solutions also at personal level. They do a lot of work defending our country and also maintaining security. We can't do business without a secure environment, true or false? So we, as Family Bank, we volunteered, we walked the journey with them, and we proudly say that we are working together with APS Bomet, and also all the other disciplined forces, like I've mentioned, Kenya Defense Forces. Thank you. Of course, our journey started last year, and our chairman has mentioned about equity and listing journey. It's quite exciting to see the kind of milestones that you're making. And we really appreciate all the investors in this room and elsewhere, and also our shareholders, because this is really validating our strategy, validating that there is something good that you're doing. And as management, from where I sit, I can commit and say that you're going to make sure that whatever we raise, we are going to deploy it where you're going to get value. A lot of engagements with CMA and also with NSE, and we want to really appreciate the partners that we've worked with, the advisors that we worked with, our transaction advisors, our legal advisors in this journey. So 2025 was quite an exciting year for us. In terms of sustainability, we are creating value beyond financial returns. So even as we share today these financial returns, I want to confirm to us this morning that as Family Bank, we are creating value beyond these returns. We are focusing on our environment, incorporating environmental risk screening in lending, and also reducing banks' operational footprint through efficient resource use and adoption of renewable energy. Last year, we subjected loans worth 21 billion to be assessed for ESG, and we are committed to even increasing that this year, because we want to run this business sustainably, ensuring that the customers and the areas we are deploying our funds is areas that does not impact our country and our environment negatively. In terms of really rehabilitating our country, we did over 20,000 trees as a family group. That is not mean. It deserves a clap. That is what I mean. We engaged through our Family Group Foundation, where we've adopted Gong Hills, part of that at Konabaridi. And we thank the partnerships that we've had, even with KDF, Kenya Defense Forces, where they went ahead and drilled a borehole at our site. That will help us to rehabilitate that. Let's give a round of applause to Kenya Defense Forces for that. And those are the part of the partnerships that we're talking about. Currently, we have 4 branches that we are having at a solar installation pilot to reduce reliance on grid energy or electricity. So what this means is that once we are done with these 4 branches, we are going to replicate that in majority of our branches. We have installed energy efficient LED lighting system in select branches. We have sensor controlled lighting in common areas for new branches that we are doing, so that we don't have all our spaces in lighting when they should not. So we have introduced sensor controlled, as well as invested in modern energy efficient electrical and backup power infrastructure. Let me say this, that one of the branches that we've been able to optimize this year, it's running 100% on solar. 100%. Of course, we had put some backup just in case it is not sufficient, but we've not had any reason so far to default to this, the other main grid. We are running on solar energy, and that confirms that it is possible, it can be done. We can operate in a safe environment, and we can be able to run our business sustainably. Within the social pillar, we have been promoting positive social impact, fostering financial inclusion, and also upholding strong community engagements. And we really applaud our group foundation that has been very key for us on this one. Currently, we've been able to support over 1,500 students, vulnerable children, who did well in their KCSE. Now I think we've been in, and also grade. Last year was KCPE. I think from this year is when we've started onboarded the grade 10. But we've seen over 1,500 beneficiaries. And for us, the impact has been very, very huge. We've walked journeys with them. We've mentored them. We've supported them. And for those who have gone through their high school, I can tell you, and I can confirm this morning, that over 85% have actually transitioned to higher education. And others have transitioned even to TVET and all that. We've invested over 540 million in scholarships over the years, and this is also not mean, and we continue to expand that. Once, of course, we bake a bigger cake through the support of our customers and everybody involved and our stakeholders, we should be able to give back to our society. We've also invested in training our youth, equipping them with skills that they can use to make a living. So we have partnerships that we've worked with Kenya Defense Forces, Military Wives Association of Kenya, supporting some youths there, and also with other stakeholders, equipping them with skills that can help them fend for themselves. And again, for these particular ones, we're also looking at the vulnerable students, the vulnerable youth who maybe don't have means. We have young mothers who are suffering in very low areas. We identify them and we walk the journey with them. In matters governance, we continue to uphold strong governance through robust risk management, ethical leadership, regulatory compliance, and transparent decision-making frameworks. Let me say that we've been able to integrate ESG in our board charter and governance structures. So the leadership of our board, they know, they understand, they appreciate what this ESG is about and how they need to oversight the management in ensuring that you're running within that framework. We've also created the Sustainability Steering Committee in the bank that helps us to keep us in check. And we always have a dashboard and asking ourselves, how are we faring on? What is this that we need to do? Are we running our business in a sustainability manner? In terms of trainings and equipping our teams, I can confirm to us this morning that we've been able to take through the leadership of this bank through ESG training and risk management training. This includes the board. Our directors have gone through that training, the management, and also our staff, because we know that every one of us has a place to play as far as sustainability is concerned. Allow me just to share a flavor of what we did through our foundation. Those are some of the pictorials. As you can see, I talked about the youth economic empowerment pillar, and as you can see there, we had the honor to be hosted by the Chief of Defense Forces there when we were graduating the Kenya Defense Forces Military Wives Association of Kenya cohort 3 for construction skills program. It was quite beautiful, as you can see on the other side. Those are construction workers already. We have electricians, we have plumbers within that front, and they are now earning a living for themselves. This other side, you can see we participated in restoring the Gong Hills Forest. And as I've mentioned, KDF was gracious enough to drill a borehole for us. So we are able to water the trees that are there, and I believe plants are underway in terms of having a tree nursery there. On the other one, you'll be able to see some of the pictorials through our foundation, where we hosted an award ceremony honoring 226 KCSE 2024 KCSE alumni. They are there, and we had the benefit of having key stakeholders attending our forum. We've walked the journey with our beneficiaries, as you can see in the last two photos, just really having a mentorship workshop with them. And it's really, it brings the alumni of this program, brings the scholars, and the reason why we bring them together is to equip them with practical life skills, and also to have financial literacy in there, and goal setting as well as career planning. And all these are very, very important for us. It's always a joy to sit in the presence of those young ones, the future of our country, and seeing the kind of impact that you're able to create in them. So we really appreciate that, and we applaud also the partnerships that are walking the journey with us. Family Bank has been known as a bank that is committed to excellence. And these are some, I've just said some, because if we were to put all of them, we'd have a few slides of the accolades that we received last year. We received an accolade from Kenya Bankers Association as the best Tier 2 bank in customer experience. And this happened for 5 consecutive years. Five consecutive years, we received this accolade. We also have a team in Family Bank that participates in a competition which is called Battle of the Banks Africa. It's an African competition. And we have teams that sit and they have a bank, they run a bank, a mock bank, where they're able to deploy shareholders' funds, they're able to make decisions, they make sure that they run that bank in a profitable way, they take care of risks. And I want to tell us this morning that Family Bank has participated for the last 3 years. And for those 3 years, Family Bank team has emerged as the winner, the overall. And remember, it is Africa. It is not Kenya. It is Africa. We have emerged as the overall winner of the Battle of the Banks Africa 2025 and also the other years. And this event does not happen in Kenya. The last time it was in South Africa. So you can imagine the kind of talent that we have in this bank that is able to make decisions, that is able to manage risks, that is able to deploy shareholders' funds and investors' funds in the right manner. So we really appreciate that. We've also received accolades on SME banking, agribusiness, agency banking. Our women proposition, as I mentioned, last year we were recognized for advancing gender-inclusive procurement by IFC sourcing program. So our women banking received that. And also we received an accolade for best mentorship and networking for women in the Banking on Women Awards. So we received those accolades, and this really confirms the kind of strategic clarity that we have as Family Bank, our focus, and what we are doing. Our foundation did not go without awards. We can't have all those good things happening within our foundation and don't receive accolades. Last year, we received 2 accolades. One was Utumishi Bora Awards, and were recognized as Best Foundation in Impactful Work in Positively Transforming Families. That was a big one for us. We also received an award in Best Impact Investing Initiative category, and this one was conducted by the prestigious Daya Awards. So in other words, what I'm saying, as a bank, the things that we are doing here can actually be recognized and awarded. And as I've mentioned, this is just part of the accolades that we received last year. If I was to put all of them here, we'd speak until cows come home. This could not be possible without our people. It could not be possible without our people. Our people, our staff. We've continued to invest in human capital. So for us, any coin that we spend on our staff is actually an investment. And we make sure that we get a return on it. In our leadership, we're able to take over 200 leaders in the bank, that is mid-level leaders, and we took them through a coaching program, and that program was on strategic leadership. How do we have high-performing teams? How do we coach for excellence? And we also had our team go through advanced management program. And this is going to help us to really drive the strategy that we have, because once they are equipped, then they are able to do well. We focused on staff wellness because we know when our staff are not well, then we are not able to deliver on what we have promised. So we've had quite a number of webinars, really taking our staff through nutrition and healthy living, financial well-being, mental wellness, a very huge piece that is affecting almost everyone. So as a bank, we've been very deliberate to take through our teams or our staff through mental wellness, also personal debt management, as well as the dynamics of building healthier relationships at the workplace. This has been huge for us, and we've been able to see our staff respond positively, and what you are releasing today is part of that investment. Balanced you are? You are balanced. Within the senior management level, we have 3862, which is also quite good. But in terms of total staff, we also have 50-50. You know, for the longest, when I was looking at this, I said Family Bank is flipping, because anytime, for the longest, anytime you talk about gender, people think about women. True or false? And people think gender represents women. But I think Family Bank, we are changing that story. So we are 50-50 at our total staff. We've also had quite a number of initiatives to build high-performing teams. Our teams, once in a while, engage in team-building activities. We have flexible working hours, especially on weekends, so that we can have our teams unwind and come back fresh on Monday. We have trainings, we have health clubs that we've signed up, our team zone, and we continue with coaching and mentorship programs. Something that you'd be happy to note is that our bank, in terms of staff complement, is highly skewed towards Gen Zs. And for us, we take it very positively. Over 60%, around 60, in fact, 60% of our workforce is youth. And what? It's youth, 35 years and below. And let me define that youth. You know, everybody is young. Yes, and we have our young man, our founder is the youngest. Yes, he says that. So when our staff who are below the age of 35 and below, they form 60%. What does that mean? In terms of innovation, in terms of speed, in terms of creativity, they are at par, top notch. In fact, we have a team. But also, it comes with its own challenges, how we manage them, how we keep them engaged. And we are up to the task as management and the board to make sure that we keep them in check. You know that? Yes, so we are really proud of our team, and allow me to register my appreciation to all the staff of Family Bank this morning. We are proud of you. You did it. What we are announcing today, you did it, and we really appreciate. Of course, this journey could not be possible without key partners. And allow me just to have that there, just showing you some of the partners that we've worked with in the course of last year. So those are some of the partners. You can see them there, and we really appreciate all our partners. These are some of the partners. We really appreciate all our partners for walking the journey with us, for believing in our vision, for believing in what we are doing, and for desiring and for purposing to walk this journey with us. Asanteni sana. Now, here comes the gist of the matter. We did all that, but allow me just to give you the summary of the group results that we have released today for the year ended 31st December 2025. Our total assets recorded a 24% increase growth, that is growth from the year 2024. Yes, thank you. You can clap. To 208.6 billion, quite commendable. Our loans and advances to our customers, and this is net loan book, recorded a 14% growth to 105.8 billion. Our customer deposits, and we really appreciate our customers for walking this journey with us, including the borrowers, recorded a 20% growth to 151.8 billion. Our profit before tax last year recorded a whole 62% growth to 6.3 billion for the group. Our profit after tax recorded a 55% growth to 5.37 billion. Shareholders, investors, our dear customers, everybody here, this is a good and a strong performance. I saw like some people wanted to clap again. It's a good performance. It couldn't have happened without all the stakeholders that I've mentioned earlier. And we are proud of this performance. And we are looking forward even to doing greater things going forward. And these numbers are also a clear testament of the clarity that we have and our strategic focus. Remember, this is only the first year of our strategy implementation. So we are emboldened as Family Bank, as management, as staff of Family Bank, even to make sure that the results of 2026 are better. Allow me this time to welcome our Chief Finance Officer so that he can give you other details regarding those numbers. Asanteni sana, and God bless you.
Ladies and gentlemen, let's be upstanding for a minute to stretch a bit. All right, I think we can take our seats. Thank you.
Thanks, Paul. Allow me to make a quick announcement. I want us to interact. So on the screens, we've put something. There's a QR code. Please scan it because we want you to be part and engage in this conversation today. So scan the QR code, or you can directly type slido.com, and the password is Family Bank. Thank you. Let's have an interactive conversation, even as Paul takes us through the financials. Thank you.
Thank you, our COO, our MD, for taking us through that session. I can confirm that I'm not in the age bracket of youth. So I'm not among the 60% of the workforce. I'll take you through the audited accounts, and I can confidently say these numbers are compliant 100% with all the accounting standards and prudential guidelines. So you can be sure that whatever we're presenting meets the international requirements. Our CEO has indicated to us the performance at a high level. I'll get into some bit of details. And I want to take you back to last year, a time like this, when we presented the numbers for EDED 2020-2024 strategic plan. And that time, we projected the growth from a compounded annual growth rate point of view. This time around, we are projecting 1 year performance because 2025 was the first year of our new strategic plan that ends in year 2029. But some bit of reflection as to how we've performed in our first year of strategic plan against the EDED 2020-2024 strategic plan. In terms of total assets, we've seen a growth of 24%. Whereas in the EDED strategic plan, our total assets grew by 14%. So a whopping 10% within the first year of implementing our new strategic plan. Our net loans and advances to customers grew by 14%. In the EDED strategic plan, we grew by 13%. Our customer deposits growing by 20%, and that when compared to the prior period, we were growing by 17%, again, a scaling up of the growth. Shareholders' funds growing by 46%, while our PBT grew by 62%, and these are group numbers, compared to the 5-year that ended in 2024, where we grew our PBT by around 30%. So we've actually doubled our profitability growth within the first year of the new strategic plan. And we are projecting getting into the future that percentage is what we are targeting to replicate going forward. Just some deep dive into the numbers. The statement of financial position closing at 208, and I'll present the group numbers as well as the bank numbers. That is the 24% that I talked about. And this growth is supported by the following. Customer deposits growing by 25 billion from 126 to 151. And this confirms our deliberate investment in technology in year 2025, we set ourselves to put in a lot of investment into what we call digital channels, all meant to support our customers and also meant to ensure what we call financial inclusion. So as a bank, we are not just a bank, we are a bank that is providing solutions to our customers. And through a lot of coming to us, we've done a lot of acquisition of customers, over 100,000 customers, good customers within the last 1 year. And these customers have given us the 25 billion in terms of deposits. We also got some money, impact funds from DFIs, and largely because we operate and support MSME sector. And you know our GDP is largely driven by MSME. We got some 6 billion from DFIs, and my CEO has shared that. And this money is what we call impact funding. Today, investors and customers and our directors and shareholders, we are able to deploy this money at single digit. So, and the money is available. So if you need money, it's available in single digit from all our brand. You can access that from our branch network. And this money is largely in hard currency. So this single digit in dollars. We also have some bit of growth in shareholders' funds. And the largest growth came in from the private placement transaction. We are happy that you came through for us. You supported us. We managed to raise, as indicated by our chairman, 8 billion against a target of 6, achieving 131%. And what is important to us when it comes to that transaction is the confidence that you gave us. So even as we go out there to execute, we know we have full support from you, our shareholders and investors. I also want to acknowledge the support we got from fund managers, pension schemes, stockbrokers. We don't take it for granted. You showed confidence in us beyond a degree. May you be blessed. How did we deploy the money? If you take investment in government securities, cash we've given to other banking institutions, and loan and advances, that forms 88% of our total assets. So the money you've trusted us with is purely deployed into interest earning instruments. And that will be reflected in our performance. That's why we are able to generate performance in excess of 55%. We had our loan book grow by 13 billion. And I can confirm at this point, due to our investment in technology, our customers, MSMEs, are able to access big tickets from their mobile phone. You don't have to walk into our branch. You get into your mobile and you can apply and get money, because as a bank, we know the need and the importance of investing in algorithm, AI. We have a team, a full department that handles that. And they are able to just do an assessment and deploy money without customers getting to our branches. And however, even if you need to come to our branches, we've also deployed a lot of efficiency. You walk in, within a few hours, you're able to get a decision. And that is the kind of a bank we want to be known for, and we are ready. We've already started, and it's working. You can see increase in government securities by 24 billion, investment in government securities by 24 billion. That is 45%. And as you trust us with your money, we have to deploy the liquidity. We can't keep money in the vault as idle cash. The same must be deployed, but as we deploy, we deploy in high interest earning government securities. And this money or this investment will be unwound as we grow our loan book. So if you look at the money we mopped up from customer deposits, around 25 billion, and the other money we got from shareholders, around 10 billion. Most of that money was purely deployed into investment in government securities, and the money we largely deployed 100% plus into our customers' loans and advances, largely supported by DFIs as well as the retained earnings. Also to be confirmed that we are very excited, if you look at year 2024, we had 7 billion that we owed to other banks. As at 2025, we had paid off that amount. So today we are not borrowing in interbank market, and that gives us confidence that Family Bank is able to settle any obligation without having to come into the market. So we've paid off that amount, and today we are net lenders in interbank market. We've deployed 3.9 billion, supporting other banks within the ecosystem. That's a great achievement for us because it confirms we are adequately managing our resources. In terms of our operating segment, remember it's important for us to show you how our business is structured. We largely have structured our business into commercial. Commercial here means our activities with government institutions, financial institutions like SACCOs, and microfinance. And we also have the other segment being our investment in MSME and retail banking. From a deposit support, we got a lot of support from MSME and retail, and that confirms that we are an MSME bank because MSME carries the highest portion of that, with 53% going into what drives our economy, that the MSME who drive 40% of our GDP. Of course, we still support, we have a number of corporate customers who've been with us, and as they graduate from MSME to corporate, we work with them. Today, we are able to deploy huge tickets to a single customer. So as a bank, because of the support that we got from our shareholders and investors, today we are able to play in the big league. We cannot chase away any customer, and I can confirm in 2025, we acquired a lot of customers, even at corporate level, who've come and they want to bank with us because they trust us, and they have confirmed that we've been there for currently 41 years. Again, our deployment of loans and advances to different segments, we had 60% of our investment getting into MSME and retail, with 40% going to support our commercial customers. The most interesting bit is that as we grow the loan book, you also have to factor in how are you growing it. And the growth is usually measured by the amount you are disbursing on daily basis. In 2025, we disbursed in excess of 94 billion to support Kenya economy and largely ensure that we continue to have our activities under financial inclusion. And I can confirm over 10% of that was deployed through our digital channels. That is our mobile banking, internet banking. So that confirms how efficient we are and the level of investment in technology. Connect. Of course, we are in banking business, and banking is all about risk management. In year 2024, 2025, we had an analysis of our NPL. Remember, we invest in our people. We do a lot of training. We do a lot of risk management. And in the last 4 years, our good loan book has always been in excess of 85% of our total advances to customers. Over 85% is good book, with 14.9 as of December being what we have in non-performing loans, which was an increase by 0.8%, and I will explain that further. However, even with that increase in NPL, you can see we are tracking below the industry average. Our NPLs closing at 14.9 against an industry average of 15.5. The good thing is that we foresaw it because this affected just 3 customers. So it's not a systemic risk within our book, but it's just 3 customers, and we had foreseen it, and we took adequate cover, and you'll see that when we get into our profit and loss account. So in these 3 customers are largely in 2 sectors. We've had a customer who is in construction, and we are all aware, based on budget policy statement for year 2025, the government acknowledged we have some pending bills, and we could foresee this, and that's why we decided to take cover, because 1 or 2 of our customers are operating in that sector, and they are yet to receive payment. And we acknowledge the government has done something in year 2026. They have cleared pending bills, or they have paid over 177 billion relating to roads. And we are working with these customers, and we expect they will also be paid in the near future. So once they are paid, then that amount will resolve itself. The other customer is in trade, and this is just for a unique case, and we are hard holding that customer to walk out of that situation. However, you can see our NPL coverage, cash, 66% of our NPL is fully covered by cash, and if we bring in collaterals, then we are over 158% covered. So I want to give you confidence that we are not exposing the bank. We are adequately covered at around 158% of our NPLs. And 66% of that means we can foreclose some of those NPLs without having to dispose customers' collateral. So that gives us a lot of confidence around risk management. Let's go next. Income statement. Of course, at bank level, we recorded profit after tax and exceptional items at 70% year-on-year growth. And that's a great achievement. Not many institutions we've seen publishing the account are able to achieve 70% growth in profitability within the country. We had our profit before tax at bank level growing by 74%, while at group level we have 62 and PAT at 55, as already indicated in prior slides. Allow me to just paint the picture on what we've done. If you look at loan loss provisions that I've discussed, what happens around there, we had an increase in provisions from 700 million to around 1.9, and that is because we foresaw the challenge with those 3 customers and decided to cushion the bank in advance, and also to align everything to the accounting standards. So we are well cushioned. In year 2026, those 3 customers will not have any impact on our financials. And that means, looking at that number, we are going to do better. And we expect at least 1 we are aware of. They should come out of that stage very soon. And the others, we are working together. Total operating income growing by 5 billion from 14.6 to 20 billion. That's 37% at bank level and 34% at group level. Key drivers of that income being net interest income, which grew by 46%. And remember, as I had indicated earlier, our total income during the prior period was growing at 14%. And now you can see our total operating income is growing at 34%. We intentionally managed our cost of funds. Our interest expense reduced from 9.5 to 8.8 billion in year 2025, while at the same time we managed to grow our interest income from 20 to 24 billion. And I want to confirm to you, investors, that that growth is largely driven by increase in transaction volumes, not overcharging our customers. We've repriced our loan book every time the regulator issues a guidance on repricing. We are usually among the first banks to reprice our loan book. But because we had a growth in excess of 13 billion, then we were able to generate a lot of income because we also managed not to have a lot of account getting into non-performing category. Foreign exchange, the FX rate has remained quite stable in the last 1 year, and that's why we had some 46% decline in our foreign exchange trading income. We've put in strategies to increase volumes around that area, and I can confirm in year 2026, the numbers will look better than what we had in year 2025. Other fee and commission growing by 1%, and there's a number I'm usually proud of. And why am I saying this? The bank is heavily investing in digital transformation. And as we invest in digital transformation, we have intentionally decided we are not increasing our transaction charges because we value our customers. We are not increasing our account maintenance. In fact, a number of our accounts don't have account maintenance fee because ours is to ensure that everybody is able to access banking. And that's why that 1%, because we are running a model where we are enabling customers to be banked rather than push them with a lot of charges. And that is working for us. Other income growing by that 8% because we have had a lot of activities around some of the products we introduced in year 2025, which are working. A good example is our custodial business. We are running a custodial business that is realizing a lot of volumes. We are getting quite a lot of support from fund managers, and I'm calling even the ones in the room to open custodial accounts with us because we pray and we intend to pray big in that area. Overall, I can confirm these numbers are better than what we projected in our strategic plan. We are way ahead of our 2025-2029 strategic plan in year 1. So I need a round of applause on that. Go next. This is just the same in Pictolio. Go next. As you are aware, we run subsidiaries. We have our bank assurance, and this is where we provide insurance solutions to our customers. And that subsidiary continues to contribute to our top line as well as bottom line. In 2025, we got 451 million from our bank assurance business, and they contributed to our profitability by 285 million. Any insurance solutions you need, we are not only providing solutions to Family Bank customers, but to all customers or to all Kenyans. So anytime you know you need insurance need, be it motor, commercial, or industrial, just walk into any of our branches and you will get a solution. Some financial ratios. The first two, measures of efficiency. You've seen our cost income ratio improve from 74 to 68. That's a great achievement because in year 2025, we invested a lot in putting up foundation for our strategic plan. So we had to spend our money to set the foundation. But regardless of the investment we made in that area, we managed to improve our cost income ratio, and we are projecting in year 2026, that ratio will be way below a number of institutions in this banking sector. Our net interest margin, this shows how efficient we are in terms of managing our interest earning asset, growing by 9% from 7.4. And this ratio is key to any investor because it's able to tell you, are we growing our loan book and pushing the same into NPL? And are we investing in high yield assets? And as you can see, we managed 9%. And you can check the industry. The institutions have released their numbers. We are doing way better than a number of our peers. Regulatory ratios. We want to appreciate everyone in this room who's been supporting us. The bank is well capitalized. In fact, as of December, our shareholders' funds are 32 billion or close to 32 billion against a requirement of 3 billion by the regulator. So the bank is well capitalized, and that gives us a headroom to not only lend to our customers, but also our strategic initiatives around expansion. Last year when I was here, the ratios had thinned out, and you came in to support us. You can see our total capital, total risk-weighted asset closing at 19.6. The regulatory minimum is 14. So we are way above the requirement by the regulator. And all the other ratios, more so even for the supporters, the ones who support us on deposit. Our core capital to deposits improved by 4.1%, meaning you can trust us with your deposits, and the bank is well capitalized. Lastly, some key ratios for investors. As at full year 2025, our book value per share closing in the ranges of 19.6 to 20%. And as our chairman mentioned, OTC prices are ranging in the ranges of 21. And you can see that is an improvement by 14%. And here I want to mention, remember when we came to you and offered our shares at 14.50, we confirmed that we were doing the same at a discount. This is confirmed by over-the-counter prices as well as the book value. And you can imagine if you invested at 14.50 and the market OTC is at 20.21. So you're looking at an investment return of around 5 shillings per share within a period of 6 months. So 5 as a percentage, 5 out of 14.50 as a percentage, you are making a capital gain in excess of 42, 43% capital gain. And as you're aware, capital gain for instruments listed at NSE are exempt from taxes. So you are making capital gain, absolute money into the pocket. Let's appreciate that. Earning per share improving by 48%. I want to discuss price to earnings. Our price to earning improving by 2% based on OTC market price. And what that ratio shows is how much are you paying for a single unit of share against the earnings of the bank. We are at 5.4, If you look at most of the listed banks at NSC, for a listed bank, the optimal range is around 8 to 10%. And that's even global standards. So this means the share price at the OTC is still presenting an opportunity for investors, because ideally that ratio is likely to go up. So that means, as it is from an analyst point of view, it's a counter they would recommend as a buy, because it seems to be undervalued at the OTC. So it's a buy counter going into the future. Dividend yields improving from 6.1 to 6.7, and this is based on what the board has proposed. It's still subject to shareholders' approval, but we are trusting that shareholders will support us on that. And this means that we are continuing to improve the returns we are giving to our shareholders. You can see 100% increase in dividend from 1.1 billion to 2.2. Return on average equity closing in the ranges of 19.5 for an ideal banking institution. Anything above 15 is good. And it also matches well with our peers in the industry. And this means for every 100 shillings you've given us in terms of your fund as share capital, we are able, after paying all the expenses, the bank is able to return 19.5%. Not many assets in this market can give you 19.5%. And this comes to you, as I indicated last time, in form of dividend as well as capital gain. And as I mentioned, capital gain tax-free in the ranges of over 40% in the last 1 year. Return on asset closing at the range of 2.6%. I want to stop there, but before I stop, I want to bring to your attention our mantra, Imara Pamoja. We are very intentional. We are fueling growth and stability in the economy. God bless you. God bless Family Bank. Thank you.
Let's give a round of applause to Paul. And just to take us back a little bit, from the MD's presentation, it's quite clear. We play in a bigger ecosystem, and it's beyond the financial services that we provide. So thanks to the presentation, we've just had a very compelling presentation. We can continue engaging on this platform, even as we set up the Q&A session. Scan the QR code, or you can directly go to slido.com, and the next is the password, #FamilyBank in capital letters. Okay, we've just had a compelling presentation from our CFO, and if there's any one takeaway for me, it's this. We are a bank anchored in purpose and driven by values. When we talk about our footprint in Kenya, the conversation is bigger than the 96 branches, the 1.3 million customers across 32 counties. We are talking about the real world impact from the presentations that have just been done. And this is presented into what we've done as a bank, 1,557 scholarships issued through our foundation, 540 million, we've invested in the future of our youth. So as we look forward to 2025-2029 strategy, we are not just navigating the operating environment, we are leading it through the digitization, efficiency, and the relentless commitment And that's why you saw the slogan around positioning Family Bank to be the preferred bank for Biashara. So today is about more than just the numbers, as I earlier mentioned. It's about the momentum we've been building as an institution. And the figures our CFO shared reflect a bank that is both resilient, remarkably agile, and in an operating environment marked by shifting inflation and interest rates. We have remained steadfast as a bank, expanding our presence and realigning our strategy to be exactly where our customers want us to be most. So from the presentation, I think you can all appreciate what has come through. So continue pushing your questions through the slido.com. And at this point, I'd want to invite the panelists. That's our chairman, Mr. Lazarus Mwema, the MD and CEO. I'd also call back Paul, who's just stepped out of the podium, and the company's secretary, so that we can have an engagement or a bigger conversation with the participants today. Thank you. So you can make your way to the stage, Paul, as I allow the team to move this podium. Thank you.
I am valued and always respected. Totally okay. And I'm gonna just a it's not just a bag. You see, it's a family.
I'd already made myself comfortable. Okay, so we are quite pleased to start this engagement, and I'll be picking what has come through from the Slido in terms of questions to the panelists. And to start off, quite excited that we've had a number of questions coming in, but then also to say we've clustered the questions so that if you do not hear us ask your question, do not be surprised, because we've clustered questions that speak into really the same kind of query. So to start us off will be our company secretary and chief legal officer, Eric Murai. And you'll allow me to read the question. The question goes, when are we listing at NSE? Over to you, Eric.
Thank you, Belinda. Yes, we've been on a journey towards NSE listing at the Nairobi Securities Exchange, and we are very excited about it. So we are, of course, engaging the regulators. We expect to list during the month of May, but I must say that that is subject to regulatory approval. Thank you.
Thanks, Eric. Just a second, I filtered through these questions. I don't see. Okay, so I have another one. This is to the chairman, Mr. Lazarus. It's time to spread our wings. Can you give us a timeline for the listing in NSE and going regional? It picks the NSE angle, but it also speaks into the regional expansion. Over to you.
Good. Thank you very much. Going regional. Now, what we did during formulation of our strategic plan became very apparent that we had a lot of work to do in country. And as the MD clearly, outlined, a lot of focus during these 5 years is around our operational efficiency. There is quite a huge emphasis on digitization. We are literally overhauling our entire core banking system. And we are doing a lot of things and developing a lot of applications to excite our customers in-house. So what did we say about going regional? Now, in our strategic plan, we said, as we do all these things, we'll keep scouting for opportunities. And let me emphasize, compelling opportunities. So if there is a compelling opportunity to go regional, we will not miss that. And we've already done a bit of scouting in a number of countries, not to be disclosed at this point in time. But really, we want to focus on our in-country efficiencies. We are also cognizant that the more you go digital, the more you realize that you can actually go digital sitting in this room. So one of the things management are doing, and they can speak to this, is to make sure that they can service our customers in diaspora, in DRC, and everywhere else, even before we go there physically. So I hope that kind of sheds a bit of light.
Thanks, Chairman. Probably just to come back to you, the question had indicated the timelines. They wanted the timelines for listing. So if you could go back and...
And the timelines for listing have been given by the company secretary. We are definitely doing it in May, subject to regulatory approval. So we will tell you the exact date. But of course, you don't want to completely preempt your regulators. So we defer to them when it comes to matters timing and the actual implementation of that listing.
Thanks, Chairman. Allow me to pick the next question. And this goes to the CFO. So let me move on this side a bit. The margin between deposits and loans rates has shrunk with the inception of risk-based pricing model. Might affect, okay. Let me repeat. The margin between deposits and loan rates has shrunk with the inception of RBMP, might affect profitability. I don't know whether I'm getting this correctly.
Thank you, Verida. I think the question is around what we are doing with the thinning on our interest income against the rate we are paying on deposit. Yes, as I indicated, we've seen our regulator continuously review the base lending rate. That is the rate at which we peg our pricing, and currently at 8.75, which is a reduction from the ranges of 10 plus. While at the same time, the rates on deposits and government bonds have come down. So meaning even for us, as we are mopping up the raw materials, we also have to balance the two. But as a bank, we've intentionally decided not to play a game price. We're going to reprice the loans as per the regulatory requirement. That is very clear to us. However, we are playing we are going to accelerate acquisition of deposit from our digital channels, which is quite affordable. So yes, we are well aware of that. We've put in strategies to ensure that our net interest margin does not thin. And as you can see, it has actually grown. And I indicated it's not because of increasing the rates to our customers, but it's because of the volumes that we are getting, as well as the cheap deposits we are getting due to digital solutions that are provided to our customers.
Thanks, Paul, for that response. I think it's made it clearer in terms of responding to that question. I can see the NSE listing has elicited a lot of conversations, and I have one question for Eric. Who are your transactional advisors on matters to do with the NSE listing? Somebody is interested to know who's handling this transaction for us.
Thank you. We are delighted to be working with Standard Investment Bank, who are actually represented here today as the transaction advisors. And we must appreciate that they've walked the journey with us. We appreciate their guidance and their advice. We're also working with the law firm of Mboya, Wangongu, and Oyaki Advocates as the legal advisors. And as well, we really appreciate their support during this journey. Thank you.
These are real people. Job, if you can I think these are real people. That's Job, and the legal advisors. I think they will be somewhere around.
Thanks, Eric, for that. At least it's been confirmed they're real people. So you've seen Mr. Paul around. There's somebody interested to know our capital expenditure in terms of the expansion we've just spoken into. We're planning to expand, and the MD had indicated not with one branch as 2025, but quite a number of branches into 2026. So I have a question for Paul. What is the planned CapEx with expansion of physical branches and also the one-off expenses from the listing process? There's that clarity that somebody is seeking to achieve. Thank you.
Thank you, our COO. I'll take the first one on capital expenditure that we've put in to support the bank. For us, we are quite aware that we have to get it right when it comes to setting the foundation. In 2025, we embarked on modernizing our technology. That is our core banking, our internet banking, our mobile solutions, as well as optimizing our brick and mortar in terms of location, as well as presence in all areas we've targeted to get into. That is not cheap. The bank has planned a phased kind of deployment of funds. We are looking at investments in excess of 3 billion throughout the next 2 to 3 years. And that investment is tracked from a return on investment on continuous basis. Before we deploy the money, we are checking the return on investment. And that is confirmed by the rate of growth in profitability. So we are not just deploying money blindly, we are making sure that money is deployed where we are getting optimal returns.
Thanks, Paul, for that clarification. Continue holding the mic because the next question is also yours. Investment in government securities, and somebody has noted that it has increased by 45% year on year from your presentation. With the current low interest rate environment, what are the plans for disinvestment?
Thank you, and I can confirm that was very intentional. Because by the moment you mop up or you get support from your customers in terms of deposits, you cannot keep that money in the vault. Money must be deployed. But you have a very vibrant treasury department who manage liquidity on a daily basis. And they are able to pick high yield assets. In fact, when you look, and I keep on referring at net interest margin because it has all interest earning assets, that ratio is actually going up because even the money we've deployed into government securities is deployed at the right rates and within the optimal ranges in terms of our targeted returns. That said, we are accelerating our investment into private sector lending. And as our CEO indicated, last year, the economy lending, the banking sector lending into private sector expanded, actually by 5.9%. And this was an improvement from prior years where lending to private sector was actually subdued. And it's projected that lending to private sector will get into the ranges of above 6% in year 2026. And we've already earmarked some of the assets we've acquired are government securities for redeployment into advances to our customers. And based on our strategy, we are sure as we grow our loan book, most of the investment classification will shift from government to private sector lending.
Thanks, Paul, for that clarity. Last but not least, I have one for the MD so that she does not step out of the podium without responding to the questions that have been floated. So somebody is quite cognizant of the economic environment and what is happening globally, but of course, the presence of elections into 2027, and they're asking, how will our business be affected by, number one, Iran-Iraq war, number two, the general elections next year, whose politicking has already started? Over to you, CEO.
Right, thanks. Thank you, Belinda. During my presentation, I mentioned about some of the things that really defined the environment that we operated in last year. Global wars, they may appear like they are very far off, but I can confirm to us, and we all know, that they affect us sometimes direct. It may be indirect, but they hit us at the end of the day. Today, the conversations we are having around trade, for those customers who deal with those countries, Middle East countries, or even in the other countries where there is no stability, they've already been affected. We've seen a lot of trade disruptions. The customers who deal with exportation business, where sometimes they have even to change the routes of where they are channeling their goods through, and this becomes quite expensive for them. When you have the Iran-US war, we understand the kind of impact that you're having, the air that is there around fuel. And if there is an impact on fuel, then it means that even the smallest household, every household in this country is going to be affected. So even as we talk about business, all these global crises that we are seeing, they are definitely going to affect the way we run our business and the way we run our homes. So for customers who are then in those segments, especially the ones who are also importing, we've seen a lot of disruptions in transport. We've seen cancellation of flights. You can imagine for those customers who are in the tourism sector, they've been impacted directly. And for us as a bank, because we deal with all these customers, we get the hit. There's that fear around the currency stability. When you have the instability within the US market, what does it mean to the dollar? So there is all that is happening. But one thing I can confirm to us is that it's going to, or it has already actually hit us and the way we are running our business. However, it also opens up other opportunities. And it is for us now to look at what are the local opportunities that are being created by all these crises, and how do we tap on them? What innovative ideas can we come up with as customers, as a business, so that we can continue to be in business? You've mentioned about elections. I think you've been around for a while. I can see quite a number of us have gone through a number of election cycles, and this is not different. So definitely it's going to impact our business. We normally have those disruptions. God forbid when we have demonstrations, we're not able to open our business. It impacts negatively on our business, but we trust that things can be under control. And it's a question of how do we respond as a bank? All these sectors that have been affected, how do we also manage the risks? How do we straighten, or how do we strengthen our risk standards, so that at least we don't expose the bank in any way? How do we strengthen our underwriting standards when you're having conversations? And above all, how do we work with the customers within the affected sectors. Because remember, as Family Bank, we believe in transformation of people's lives. Remember, I talked about enabling our customers to create and sustain wealth. So for those affected, we are walking the journey with them, having conversations on how we can be able to support them even during this crisis. But above all, we trust that it's going to end so that we can go to a normal course of business. So it is there and it is home. Thank you.
Thanks, Nancy. She's gone over and beyond in terms of responding to the question. Allow us to come to put this on a close because I've seen a number of questions coming through still under the clusters we've covered. So what we're going to do is we will be responding on Slido. So we have a team seated and they'll be responding to the questions that are coming in on Slido. And of course, the management will be at your disposal, even as we close this, to have more engagement and interactions around the questions you're asking. So let's give a round of applause to the panelists as I allow them to take their seats. And thank you so much, ladies and gentlemen, for well-answered questions. So ladies and gentlemen, we have reached the end of our briefing today. And as we conclude, I want to leave you with one final thought around banking. It's no longer just about where you keep your money. It's about where you build your future. The insights shared today, from our digital transformation journey to our robust capital position, are not just statistics. They are the building blocks of the trust you placed in us every day. We are not just managing assets, we are fueling dreams of entrepreneurs and also growth of industries across the country, and also putting some stability in households. On behalf of the entire management team, the board of directors, thank you for the pointed question. Even as we continue responding on Slido, we appreciate your engagement today. We remain committed as a bank to delivering the excellence and just transparency you expect from Family Bank. I'll also take this opportunity to give a vote of thanks. So again, as we come to a close of this session, it's my privilege to offer a vote of thanks as a member of management for Family Bank. So first and foremost, our sincere gratitude goes to our shareholders and investors. Thank you for the capital you've entrusted to us, but more importantly, for the confidence you place in our strategic vision. I want to extend the deepest gratitude to the architects of the financial stability we've discussed today in our presentations. To our finance partners, and MD had projected quite a number in terms of the people partnering with us and giving us impact funds. Thank you for the support. The support you've given us is the engine that allows us to scale our impact. To the fund managers present, I know they're seated here amongst ourselves, the institutional investors, thank you for your presence today. We recognize that you manage the hopes and the futures of thousands of Kenyans and also global stakeholders. And we appreciate your rigorous analysis and your decision to make Family Bank a core part of your portfolio, even as you sit today to listen to our financials. We have investment analysts seated amongst ourselves. We value the depth of your scrutiny. Your reports and insights provide the market with the clarity it needs, and we appreciate the professional engagement we've shared throughout the financial year 2025. Our gratitude goes to the custodians and investment banks present, and I can single out SIB. Your role in maintaining the integrity of a financial ecosystem is vital to the stability we celebrated in today's results. A special mention to CBK, our regulators for oversight into the Kenyan banking sector, which remains a beacon of stability in the region. And of course, a special thank you to our board of directors, and I'm smiling as I look at majority of them seated here, led by our chairperson, for the strategic foresight and governance that allows us to stand before our investors with a story of growth and resilience. let me turn to the CEO and the management team. Thank you for the tireless execution and leadership that actually turns our strategies into the results we've seen today. Thank you to the staff of Family Bank. I know the MD had thanked all of you. Allow me to also extend the same to you. Thank you for the efforts and for the resilience in ensuring that we had beautiful numbers today. We also recognize our partners in the media. Thank you for your role in telling the Kenyan banking story with a lot of accuracy and depth, and that's why you're present here today. Finally, to the organizing team behind the scenes, the event staff, the technical team seated on my extreme right, and of course, the hospitality crew from Serena Hotel. Thank you for making this morning a success. And also, thank you to our sign language experts seated on the far end. Thank you so much for what you're doing. We appreciate all of you. As we leave this room, let's carry forward the spirit of partnership. We look forward to seeing you in our next milestone. And of course, the MD said there'll be great things coming along, even as we go into 2026 and beyond. Allow me to take this moment to wish you safe travels for those moving from this place to the next destinations. But then again, take a moment and get to interact with our management team seated here, the staff of Family Bank, even as you pick conversations around the numbers we've presented today. So thank you so much, asanteni sana, and have a productive day. So this comes to an end. Thank you. So we're free. Oh, and I'm told, sorry, we started with prayers. Allow us to end with prayers. So I'll still invite our pastor in the house to close for us with a word of prayer. Thank you.
Let's bow for the prayer. Thank you, gracious and everlasting God. We began this session today, inviting you in your presence. And Lord, we've seen you've guided us through and been able to execute the agenda of the day successfully. We want to return all the glory and honor unto your name. As we leave this meeting, God, we want to trust in you that you'll guide us even in the remaining sessions in our various activities that are ahead of us. Thank you, Lord, and may you be with us in the rest of the day. In Jesus' name we pray.
Thank you, Bildad, for that short prayer. We are all blessed. Have a lovely day. Thank you.